Hello, what our group present today is AUD dollar against USD dollar and AUD dollar against Europe dollar. We analyzed our currency in terms of three main indicators: economic growth rate, interest rate, and inflation rate. Firstly, for Australian economic growth rate, Australian economy grew by 2.4% over 2017, and the central bank forecast remains for faster growth in 2018. Because business conditions are positive and many business investment is increasing, employment has grown strongly over the past year. Also, because of global economic conditions strengthened further over 2017, especially our training corporate is growing up smoothly, which will increase our export. The positive economic environment affects the currency of Australian dollar deeply, which may lead appreciation of Australian dollar. From the diagram, we can see clearly from 2018 to 2020, our GDP growth rate is increasing smoothly. In the diagram, we can see clearly from 2015 to 2018, the Australian interest rate is in a stable level, which is 1.5%. That attracts foreign businessmen to invest and put money in Australian bank. Thirdly, for Australian inflation rate, the inflation rate was a little below 2% in 2017, and the central bank forecast inflation will be around 1.9%. Because of low inflation rate, which will lead increasing in demand for AUD, further influence the currency of Australian dollar.
Hi, I'm Qianshun. I'm going to talk about United States. There are three main indicators. The first indicator is economic growth rate. U.S. economics was growth faster after financial crisis, but economics become expansion. These are the reasons. Employment rate has declined to 4.1%, which is below its natural rate. Wages increase and consumers have more confidence to spend their monies. There's a strong growth in consumption expenditure. Stronger foreign growth also support U.S. economic growth. And in 2017, the growth of exports increased, which means that exports boost U.S. economics, while on the other hand, it also pushed U.S. economics expansionary. The second indicator is interest rate. In the past 9 years, due to financial crisis and great recessions, interest rate remained low, which it declined 150 basis points and currently is 50 basis points. These are the three main factors. The first one is economic growth slow, which can boost savings and depress investment. The second is weakness of investment as lower productivity grows. More aging of population is another factor. As households near retirement, they are more tend to save more money. The third indicator is inflation rate. Inflation rate is low in long term, which is below 2%. Due to its labor market condition improved, with wages increased 2.9% in January 2008, and employment rate lower, and inflation expansion, transitory changes in energy and import price could also influence the interest rate. Overall, compared with Australian exchange rate, AUD tended to appreciate against USD, as Australian economics is more stronger than Australia, which will lead higher inflation in the next period. US economics expansionary, and also US interest rate tend to decrease. Australia export tend to increase in the future.
Hi, this is Angela, and I'm talking about European area. And the first indicator is inflation rate. Markets are currently expecting the inflation estimate to print at 1.4% in March, and the average point forecast for long-term inflation expectations remain unchanged at 1.9%. And these data are all come from the European Central Bank. The gross domestic product in the European Union rose by 2.6% in the first quarter of 2018, and the rising domestic economy should fuel another year of solid growth in 2018, as last year's growth drivers are largely in place. The European Central Bank has held interest rates steady at 0% since March 2016 and signaled it would keep up its aggressive monetary despite data showing strong economic performance in the region. This is in order to push bank excess cash into the economy to stimulate economic recovery. Therefore, overall, the European Central Bank maintained its main interest rate at 0% and raised its forecast for economic growth in 2017 by 2 percentage points to 2.4%. However, in Australia, the interest rate is 1.5%, which is much higher than interest rate in Europe. And despite Europe have lower unemployment rate this quarter, we come with our conclusion, and that is Australian dollar tend to appreciate against Europe dollar.
This is the movement in demand and supply curve of Australian dollars. From this diagram, we can clearly see this relationship between exchange rate and quantity of Australian dollars. The demand is shifted from D1 to D2, and the supply curve is shifted from S1 to S2. And also, there's a big changes of quantity of Australian dollars, which increase Q1 from Q1 to Q2. From D1 shift to D2 implies that more demand for exports and therefore more demand for Australian dollars. S1 shift to S2, more imports and therefore more supply for Australian dollars. In conclusion, Australian dollar is more appreciated against US dollar and Euro dollars.
The last page is just our reference list. Thanks for your listening.